Hello and good evening to Lottie Dottie everybody. This is Tim Davis coming to you guys from the Bullish Bears team. And I wanted to go over my GLD trade to give you guys an update. Um, but prior to me going over this GLD option trade, for you guys who have not visited us yet, please, you guys, come join this Bullish Bears team and Bullish Bears community. We have, if I can get my computer to load up here. If you haven't been to our website, please visit our website at www.bullishbears.com and you can find all about us as well as follow through these tabs that we have at the top. Take a look at these tabs, see what we all have to offer. We got a chat trade room. You can subscribe to our trade room as well. And just follow us as well. We have personal coaching that I do, going over chart analysis, and a whole host of other things, as well as the YouTube channels, as well as Twitter, Facebook. You guys, come and check out our Facebook page, and be sure to become a member. Become a subscriber of our YouTube channel because we post videos on our YouTube channel all the time. And join our Facebook community group, which is called Stock Market Community, and we are very active on there as well. Okay, so please do those things, and you will be able to keep up with the Bullish Bears team. Okay, now let's go over this gold trade for you guys. All right, so as you guys know, there's a lot of geopolitical risks that's going on in our country and in our world right now with with Kim Jong Un and North Korea continuously making these threats against the U.S. and the U.S. firing back, saying we're going to do this, we're going to do that. Well, things seem like they're starting to heat up with a lot of this rhetoric talk. Not only that, there's the UN has put sanctions against North Korea, signed to have more sanctions against North Korea, and North Korea making threats to to attack Guam, and a lot of things going on. So with that said, let's look at this gold trade that I've been in for about a week now, and I think I'm going to end up holding it for a little while longer. This is the gold futures, and I want to show you guys something as in reference to gold. Right now, what I have in front of you is a daily chart. It's a daily chart. I'm going to show you guys daily, hourly, and weekly to show you guys an overall view of what's going on with gold. As you can see, gold has just. As a matter of fact, let's start with the weekly chart because I want to give you guys a broad overview of the overall status of gold, and then so you guys can make your own conscious decision on what you might want to or not want to do. This is the weekly chart of gold dating back, let's say around 2014, around August 2014. And as you can see, gold has been trending down. It was trending down in 2014, overall downtrend until it hit around 10.45 an ounce. That was back in October of 2015. Then we started to run up. Went way up here at 1377, and then gold started to sell off. 1377, they hit that back in July of July of 2016. Way up at 1377, and we sold off since then. Big sell off, and that's like we're trying to trickle back up. It looks like sold off 2016 when we got up to that 1377. Went all the way back down here to around, let's see, that was looks like 1123. But since this sell-off back here looks like we did not create a lower low. We got down here in later part of 2016 and beginning of 2017. We went back down at 1123, but did not create a lower low. So we did not go lower than that 1045, which was created back in 2015. We stopped here and started to trend higher. Now it's like we've been in this little up and down pattern for several months now in 2017. All right. And we got another little parabolic star dot just forming on a weekly chart now, which means that's a trend to the upside on a weekly chart. Trend to the upside, like it's just starting to form with that parabolic star dot there. And TTM squeeze shows, you know, a pattern, a change about to happen. Like we slowed down here, momentum slowed down. It's like we changed, and like we may be going back to the upside. So we have to see how that pans out. But with all the geopolitical risk, I think we are going to the upside with gold. Now for a couple months, we've been bouncing around this 1300 level. Not been able to make it back up to this 1377. Been bouncing around this 1300 level for quite some time. 1300. Once here, and we're almost back up here again. I think we have the. I think we're at the right point. We got enough things going on for us to make it past the 1300 again now. How far we go past 1300, who knows? So I think we're very close to it now. We're around 1292. As you can see, we're around 1292 now. This 1300 is going to be as resistance. So once if we get here this week, tomorrow and Friday, if we get there, you know, we may expect a pullback. It all depends. We may not. It may blow right through it and continue to go higher. So we'll see how that pans out. But real close to that 1292. I mean, we had 1292. It's real close to that 1300. So we're going to run into some resistance here. So we'll see what happens once we get there. So, but looking at this weekly chart, overall trend looks like it wants to trend to the upside. Got a lot of things here going for this, saying it wants to trend to the upside. All right, let's go back and look at let's look at a couple other charts here of gold. All right, like I said, you can put these lines any way you want it. Put it right up here. This 1300 level, 1300 is where price is trying to go, trying to get back to that 1300 level. If we break that, we tried it here, it failed. This is going to be our third attempt doing this year. I think this time may be a charm. I think we may blow through it. We'll see what happens over the next couple of days or so. All right, and if you look at the hourly chart, we are way up here, 1290, way up here. Hourly chart, this thing marched right up over the past couple of days or so, way up. So who knows? It looks like it wants to, you know, it may trickle sideways, may pull back a little bit here. We'll see what happens over the next couple of days, but I believe within the next week we should break this $1,300 barrier. So with that said, the way I normally play gold is with using the GLD ETF, and this is a weekly chart of GLD. And as you can see, we made this big old dip like we did with the gold futures, way from 131 all the way down to 107, and we've been marching up since then. And we've been stuck below the 200-day moving day average line. But look at this big green candle on this weekly candle right here. Big green candle, which is weekly in now. Nice big move in gold this week. So we'll see what happens. We may stop there and then may continue on Monday or sometime next week. Move to upside. We got to see what happens. But we already breached this 200-day moving day average line on this weekly chart. Hovering around this 123. We're right at 122 now. 122. If we get back to 123, if we blow through this 131, we have our eyes on that. 124 next, then 131. We have our eyes on that. This is what the weekly chart looks like. Let's take a look, and as you can see with the MACD, you got a buy signal here. If you look real closer, you'll see on a weekly chart on the MACD where the black line crosses over the red line right here. That's normally a buy signal, and it's above the zero line on a weekly chart. So weekly chart looks strong for gold, for GLD. Also, Williams percentage, we're just getting up here in this border area, so that's a good sign as well. All right. Let's look at a couple of it. Let's look at the daily. Let's look at this daily chart over here. This do 3 months. So looking at the daily chart, on balance volume is tracking, like I told you guys before, tracking with the RSI. Both want to shoot to the upside. 123 is going to be our first target, and we are almost there now. 123 will be our first target. May pull back a little bit after that, but I'm looking to go higher. Went up here to 121, then we pulled back and we pulled back to jump on this launching pad right at the top of the cloud on our Ichimoku cloud system and launched higher. It just catapulted today. So I'm looking for gold GLD to continue to march higher. I mean, it has a lot of strength and momentum to go higher, and a lot of things going forward as far as this geopolitical risk. So I believe I'll probably stay in this GLD trade probably most of the month, if not all of the month, the rest of this month. And as far as to here and now, the hourly, if you're interested in getting into this trade, I think you still have time to get into it. Hourly chart shows overbought right now, way overbought. So we could be pulling back close to this 121.50 level maybe. That's even if we even get that low, but we could be pulling back a little bit around to this 121.50 level maybe. Pull back is not bad. It's a good thing. We need to pull back a little bit. Gold has had a nice push this week. So we may see some pullback in here. After that pullback, I'm expecting to see gold go even higher. Okay, so right now this trade is still a go. And one thing, another tool we just started using, you guys, is I'm not sure if you guys ever heard of Benzinga, but we use this Benzinga Pro to give you constant updates all the time. Gives you signals, lets you know what's going on, and it gives you instantaneous information all at your hand. Wherever you want to look at the overall market, there's different. You can click on news feeds. You can start different workspaces here. Look up details, calendar events. You can create a watch list, little screeners here. So this is a very, very good tool to have everything at your hand if you want to keep up with the market instantaneously. So Benzinga can be very, very good and very, very helpful. We will be launching a link on our Facebook page very soon, and even on our website, more than likely, where you can become a member and get Benzinga Pro at a discounted rate. So stay tuned for that. But you got to be able to be a Bullish Bears member, because you won't be able to have access to this link that we're going to provide all of our members so they can get a discounted rate. This is a very, very good tool I started using within the past week. And you put your ticker up here, and it gives you different signals. I have all news on this side. This side I have a chart with some information at the bottom. You can click on news. And it gives you some updates, what's going on with the overall market. Got a signal here on August the 9th. This is right before the market opened yesterday morning. That gold was spiking. So you got that before the market even opened. Gives you some good information that you can use when the market opens, and then tells you about the NASDAQ got thumped again in a broad sell-off. So gives you some good up-to-date information, like off the top of your head. I mean, off the top in the beginning, before things actually get started. So let's take a look here. I just want to show you guys. Okay. So the trade I actually put on, you guys, and I just bought a straight call option on GLD because everything that's going on. This is my defensive trade. So everything that's going on, I kind of got out of some of my longs and added some protection. This is just one of the protection pieces that I added. Gold, and I do think gold is going to go higher. Bought the 122 strike. I got this. Once I got it a few days ago. Volume is still kind of high. Open interest is up there too. Volume is really, really high for this 122 strike. Got it a few days ago, and I'll probably hold this probably closest towards the end of the month. As long as all this geopolitical stuff is going on, I'll probably hold this fight probably for the rest of the month. I may just hold it out to the rest of the month into September. May just get rid of it just prior to expiration as long as the trend stays the same. I like to say that with disclaimers because you got to be able to read these trend charts and be able to withstand certain, some pullbacks here and there. But if the overall trend continues to stay to the upside, in other words, I don't start creating lower lows. And let me show you something. What I mean by that is that on these, if you look at the hourly chart, it's just noise. So I really don't go by the hourly chart when I want to stay in something for a couple of weeks or a couple of days or a few months. I don't want to start creating lower lows. See how we this was a low here of 1194. This is a low here of about 1216. This is another low here of 1207. I don't want to come back down here and create a lower low lower than 1207. I'm up here right now at 1292. I really don't want to go back down to these lower lows. So as long as we stay above right here where as long as we stay above this 1256, more than likely I will stay in this for the rest of the month. We can keep this level. Generally speaking, I believe we can stay right now the way things are going. I think we can stay above this 1276. It took us a while to get here. It took us several days to get here. Stay above this 1276 with the overall gold futures market. I'll stay in. And if I look at my GLD, I use the gold futures as a tracker to track my GLD trade. The same thing here. Right now, GLD, we see how we was hovering around this 121 for quite some time. Finally catapulted out of this 121. As long as I stay above this 121.14, I'll stay in this trade. So if we have a pullback down at 121.50, I'm good. I'll just stay in for the next run up. All right, so I'll be in this probably at least about a month or so. So again, I purchased the 122 strike. I had this now for a couple of days now, and I'll probably stay in this trade for about a month or several more weeks at least. All right. Hopefully, this was some good information for you guys. Remember, you guys, anytime to pay attention to this market, no matter what this market does, there's always ways to make money in this market. Whether we're going through geopolitical risks like we are now, and the market starts to sink and tank. And while we're on that notion, for you guys who like NVIDIA, I just want this is just a bonus, and this is another one, you guys. This thing has been a great money maker over time. But I'm gonna show you guys something, which is another thing, which should be another sign of some type of geopolitical, some type of risk that's going on within our market. NVIDIA has been on fire, and I'm gonna show you guys a longer term chart so you can get the overall view of what's going on with NVIDIA. And what we can expect, because nothing goes up forever. All right, look at NVIDIA. This thing has been on a tear. Back in 2004, you guys, this thing was it was down as low as 288. Started marching up, had some ups and downs until it really catapulted back in 2013. It really marched up from its 1035 and really took flight from that point on. But look at the MACD. Look how overextended this thing is. It's like a rocket ship straight up in the air. It's a rocket ship almost at the top. Brink of extinction. On balance volume. I told you guys before, almost at the 100 line. And this overbought area has been up here for a very long time. This thing is it's up like a rocket, you guys. Nothing goes up forever without having some type of correction. Okay, especially being in this overbought area for so long. It's bound to trickle back down, at least to the 70 line somewhere. So I think I think NVIDIA is just due for a pullback. Okay, it can't just skyrocket forever without having some type of significant pullback. So when it had reported earnings today, and that thing dropped like a rock. I mean, it dropped a lot today after a great earnings beat. Okay, it's not that the company is bad. It's just totally overbought. People just taking profits. So looking at Nvidia to pull back. I mean, with this overall market pulling back and the geopolitical risk, I can see this thing trickling out of this overbought area, which may be a good opportunity for buy. All right. All right, you guys. Hopefully you guys got some good information out of that. See you guys on the next videos. Tim Davis from the Bullish Bears team signing off.